I hate to say it, but the US economy is in trouble. Inflation is heading back up. And because it is going back up, millions and millions of Americans are going to struggle. We are going to see low income earners have a tough time paying just basic bills and their necessities. Higher income earners are actually going to start going behind and defaulting on certain payments. I want to break down what we are seeing happen right now and what you should expect moving forward. All I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So why should millions and millions of people be worried? Well, we should be worried because inflation is going back up. And right now, many people were predicting this long storm of prices going in the wrong direction. For instance, egg prices going back up, gas prices going back up, rents going back up. How crazy is this? When many economists over the past year or even year and a half were predicting that rents were going down, car prices were going down, inflation was going to just plummet. But I said, just be ready. Just be ready, because what was going to happen, and we were going to see this, is things were going to go down so quick, where the expectation was prices were going to drop. All of a sudden, they were going to rebound, turn right back around, and start going up. That's exactly what is happening. And this is creating a huge issue, because right now, just shopping for food is becoming a struggle, because food prices are going in the wrong direction. They're heading back up. Milk prices are more expensive. Beef is more expensive. Chicken, more expensive. All these things are becoming more expensive. Just think about cereal. Think about bread. Think about just a box of crackers. We're seeing shrinkflation, where the normal box of cereal, whatever size it was, now we're seeing it is about 5% smaller, but the price is the same. So essentially, the company is still making 5% more, but their prices haven't increased. Only the size of the product has gotten smaller. Most people don't see that coming. Now, here's the big concern, and this is one of the reasons why experts believe the economy is going to get worse. What happens right now is millions of people are out there shopping and buying clothes, buying food, paying for medications, all these things. Some are necessities, others aren't. But what they are doing is they're taking their purchase and putting it on a credit card. They're using some type of split payment system. Maybe a buy now, pay later. That's what they're doing. And it's creating a little bit of an issue, because as they buy all these things on credit, we're now starting to see defaults increase. Here's an article from Bloomberg. It says credit card delinquency rates were worst on record in a Fed study. It said almost 3.5% of card balances were at least 30 days past due. Some credit scores dropped to the 2020 lows, according to the Philadelphia Fed. Now, I bring this up for a couple reasons. Number one, we are seeing people run out of money. And what's worse about all this is that the credit card delinquency rates, we are seeing them almost there. It's almost going back to the pre-pandemic levels. Okay, that's the concern. And in some cases, we're going past this. Now, I want to read you this. Okay, look at this. It says almost 3.5% of card balances were at least 30 days past due as of the end of December. Again, this is right after the holiday season, where many people were shopping, putting money onto credit cards, and then, unfortunately, they couldn't pay it. It says that's the highest figure in the data series going back to 2012, and up by about 30 basis points from the previous quarter. The share of debts that are 60 and 90 days late also climbed. It says nominal credit card balances set a new series high, and card utilization also rose as consumers stretched credit lines further. Inflation-adjusted credit card balances remained below fourth quarter 2019 levels. Now I want to show you these two charts. Okay, let's start with this first one here. This one right here is accounts making the minimum payment. All right, let's go back. Let's go back to the first right here. This is the first quarter, the end of the first quarter of 2020. It's at 9.8% of accounts are making a minimum monthly payment. Then as we got stimulus checks, it started to drop. You know why? Because people were not making a minimum monthly payment. They're making higher payments. They're paying off their debt. Well, look at us today, okay, or the end of the fourth quarter of 2023. We're at 10.7%. This means more people are paying the minimum. Look at this. This is the chart that just scares me. So let's go back. Let's go to the first quarter, end of the first quarter of 2020. Okay? So this is January, February, March, end of March. All right? This is right before the pandemic hit, because that pretty much came to begin, well, I guess really in the beginning of March or the middle of March. But it says the revolving balances was $542.6 billion, right? Then as all the stimulus hit, then we got down to $417 billion. And then now it's grown $623.3 billion. This is as of the end of 2023. Those numbers are staggering. We are worse off today than we were in the beginning of the pandemic, even right before the pandemic. And you know what makes it worse? Is that inflation is likely going to push back any chance of seeing a rate cut by the Fed, which means your credit cards are still going to be just as expensive, if not even more. Look at this. It says Larry Summers, he's the former Treasury Secretary. He says CPI raises chances that Fed's next move is to hike, not to lower rates, but to hike them and make them go up. I want to show you this, okay? This right here, this is from the Federal Reserve's website. This is the FOMC meetings, okay? This is their meetings for 2024. See it right here. So we've already had January, we already had March, okay? There's April. Now here's the thing. We are not expecting a rate cut for potentially 3 to 4 meetings, maybe longer. The Fed's going to be very patient. So if that's the case, we got April, May, June, July, September, okay? I wouldn't expect anything in any of these meetings. That means it would be pushed back until either November or December. Look at this date. November 6th and 7th is their meeting. Do you know what happens on November 5th? On November 5th is our election. It is the presidential election. November 5th is a Tuesday. That is when all things could change. That week could be a monumental week for the stock market and just for the U.S. economy in general. Because if we see, let's say, former President Donald Trump wins, and then we see rate cuts right after that, here's what I can tell you. It's going to look like it was political. If we see President Biden win a second term, and maybe we don't see any rate cuts, maybe we do. Again, it's going to look political. The expectation is if we see a rate cut, it probably isn't going to happen here because it would look like it's a political move. But if it happens here, now it's not so political. But the expectation now is we may not see a rate cut in this calendar year. We may not see a rate cut until 2025. Now, why would that be so concerning? It's because your credit card bill is going to remain expensive. You have to pay that high balance. You have a high balance plus on top of that, you have a high interest rate. Well, you are screwed. All I can tell you right now is the U.S. economy is going to get worse. Inflation is going to get worse, and your personal finances could be hurt all because of this. So, just want to share this with you because I know a lot of people are talking about the CPI number, what inflation rose to just today, but what they're not discussing is what is on the horizon and how bad it could look moving forward. So, if you have any questions whatsoever, please ask your questions down in the comment section below. But that is what we know as of today. So again, thank you guys for watching. Consider subscribing. And I'll see you guys on the next one.